So basically, you want to make a crypto. So let's suppose the coin name or the crypto name is X. So you made this X crypto. You get your crypto registered or enlisted in one of the exchange. Okay, and let's suppose you say you have to declare that how much of crypto will be the maximum circulating supply will happen. You can say that 20 million or 10 million. So there will be total 10 million tokens or 10 million coins which can be mined for X, and per coin, let's suppose on today's date you define that the per coin should be 0. Or per coin should be 1 rupee in fiat currency. Okay, in crypto you always have to, since Bitcoin is the mother of all currency and it has a market dominance, so you have to compare that against Bitcoin. So for example, one currency which is 1 rupees, okay, in Bitcoin or in USDT stands for the dollars in crypto world, USDT, and Tether it is called. So in as per Bitcoin, it will be 0.000001 or something, okay, value of your one coin, which is like X coin, which maximum 20 million coins can be mined. Okay, and you put a value and you enlisted that. So now your coin is live and active in the exchange with a valuation of this, which is like in Indian currency it is 1 rupees, for example. And you launched it. When you do this, there are a lot of, again, jargon comes into picture like airdrops, ICO. Okay, ICO is nothing but IPOs, basically initial public offering. So in stock market, if a new company gets registered or get onboarded or enlisted in the stock market, it does IPO. Okay, so it basically lists its share, and its shares are open to the public with a listed value or a price. Similarly, when this coin comes into picture, before the coin comes into the picture, there will be a project which will be declared in the crypto world that this particular company is trying to launch this particular coin, which is X, which is a value of 1 rupee Indian currency, and which is a maximum supply of 20 lakh, and we are opening to the public with the initial value, or ICO, that is called ICO, initial coin offering. So ICO value of this much Satoshi or this much of USDT. So anyone who has to buy that, they have to go to the site. There are different promotions which keeps happening when the new projects get launched in crypto world. All this information you can find it in this portal, Coin Market Cap. So when this coin launches, this is the valuation, and you are a miner, for example, you are doing mining, and that is a decentralized coin. So you got an algorithm for mining that particular coin. So you put your mining machine in mining X crypto, X coin. Now you know the value of that is 1 rupee. So for example, on a typical date, it will always be 1 rupee. But now comes to the twist or the beauty of crypto. This particular coin all of a sudden saw a demand, or you are solving a particular problem which is very unique. Then for example, Doge was a meme coin which was generated, but the moment the institutional buyer like Elon Musk, he said that we will accept Doge to buy Tesla or something which he told about Doge, then all of a sudden the price of Doge from 0.0001 it went up to $1 or $2. So like that, if your coin has a promising future, this particular valuation might jump 100 times or 200 times or 300 times, no matter, because there is no restriction. It might be from 0.001. If it jumps 1 point or 2 point also, you get 100 times or 200 times of the appreciations of that 1 rupee. So that 1 rupee overnight, when this kind of scenario happens, when you get an institutional buyer or somebody who is vouching for your coin and he says yes, people should buy this coin. So again, there is a jargon which comes into this thing, which is like pump and dump. People say that it comes in trading also. So, but during this time, when the initial coin offering happens, and after a certain period of time, somebody says that this is the best coin, and all of a sudden people started buying this coin, and you see all your revenues going up, and the valuation of the coin also automatically goes up. So this 1 rupee becomes 1000 rupees. So now coming back to this 200 coins discussion, which I said about mining. Let's suppose this 200 coins at a given point when you are mining was 1 rupee. Okay, but when this kind of a event happens, when somebody says that yes, this is a coin and you should take this coin, this valuation of 1 rupee might become 1000 rupees or 2000 rupees or 10 rupees, whatever it might be. Even if it becomes 10 rupees, it is like 10 times of the initial valuation. So just imagine you have not sold your currency, you have kept it like that, and this valuation, whatever it is on today's date, might not be sufficient for you to pay the electricity bill. But if such kind of an event happens and this coin becomes 200 or 300 times or 100 times or even if 10 times also, which becomes very high value. Okay, that is the reason I was telling you, do not sell the coin which you get out of mining, rather than do trading. So now coming to trading, basically trading is something which is if you compare that trading into the fiat currency world or the normal people's world, it is called it is called same as like trading, but in stock markets or commodity markets. So now what is stock market and commodity market? How you can buy or sell stocks? First of all, you need to have a demat account. You need to have a bank account. First of all, you need to put money, like initially I said, you need to put that money. Then you open a demat account, connect your bank account to a demat account. At some point nowadays, some of the private banks, they are giving demat account associated with your bank account. So you put in your money and then you go to the exchanges and you buy and sell. There are companies like Zerodha and many companies who are providing this kind of a thing in app also nowadays. You have an app and so you can buy and sell. They will also give you tip of the market that this stock might go up, sell buy the stock at this price, sell it up at this price, no profit, no loss. If you want to exit at any given point of time, this is the valuation. So a lot of tips will come. Similarly, trading happens in crypto world. So when trading happens in crypto world, basically what you did, you initially you bought you went into exchange, you opened a wallet, you put some money in that, you bought some equivalent value of crypto, which is like Bitcoin or any other currency, and then you keep watching on the market, because you will see a lot of coins going up, lot of coins going down. It might be starting from 0% to it might go up to 100%. It might go up, even it might fall down to 100%. That means if you have bought a currency of $1, it might become $1,000. It might become also $0.0000. So there is this particular field is highly volatile. So please, as a you can say a disclosure to all my audience who are seeing this video, crypto market is very volatile. So you can never say that what will be the valuation of that particular crypto, either which you bought or you mine. Tomorrow what will be the valuation of that? You never know that, and you cannot control that because it is decentralized. So whenever you are putting your money, please, my dear friends, do not put the money which can put you into the risk, because if that money goes down or the valuation of that company goes 10 times down, you should not be thinking, oh crap, where did I end up into? So that should not come into the picture. And it can also happen in the vice versa, other way also. It can go up to 10 times, it can go up to 3 times, it can become double also. It might happen that you bought 10,000 rupees of crypto, and tomorrow that 10,000 you bought Bitcoin, but you saw that a particular coin is going up. There is some announcement which has happened in that particular coin that some new features are getting added up to that coin. So that coin is shooting up slowly and gradually. So if you get those informations, what you do, you trade. So basically in the trading, what you do in the dashboard, you have this much of value of your Bitcoin or USDT or crypto or a mineable this thing, whatever you mine, that coin is there, that has this value. With that value, let's suppose that value is 2000 rupees or 2000 coins has $1 valuation, so you have $2,000. So with that $2,000, you are hearing a noise in the market that this particular coin is coming up with this and it is going up. and you bought it. So you sell that this 2000 coin in the market, in the exchange, and buy the other one. So in crypto world, this is called trading or flipping the coin. So this is actually the real money of crypto, flipping the coin. If suppose you have Bitcoin and Bitcoin by default it is going up or going down, but if you flip a coin which where you see that this particular coin might give you 3x return or 10x return or maybe 100x return, so you put your money into that, you sell this coin or the mining coin, whichever you have, and you buy the other coin which is going up, and you saw that it has gone up to the peak, and you come up, you sell that and you convert whatever funds you have, this 2k might become 20k in a span of 1 day or 1 hour also. And again, to protect this 20k, you convert that back into your currency, whatever you have, whatever is the best currency. What I would recommend is convert it back to USDT, which is always $1, and keep it in your wallet. So again, that money which was like $2,000 became $20,000 because of the trading and flipping, and you convert it back to your currency or Bitcoin or USDT and keep that in your wallet. So that becomes your net revenue or net income of that. So trading is a beauty which crypto can do with you. So I think this part is pretty clear. Now coming back to what are the ways by which you can make money out of crypto. One is mining, which I think I have explained to you. Second is trading or flipping the coin, which I have told to you. Third is investing. Basically you invest in some particular project for a longer period of time. You know that this is going up, maybe not today, maybe down the line 2 years or 1 month or 3 months or whenever it is. So you invest in that like a regular investor. This kind of investing is also found in the stock market, where people keep the stock, hold the stock for a very long period of time. Again, yes, there is one more jargon which you will find all the time, is instead of hold, crypto people say it as hodl, HODL. So hodl means hold to it. No matter whatever the market says, whatever is the government regulations happening, lot of volatility and lot of things happening, hodl means hold to it. Don't sell anything. Don't do panic buying. Don't do panic selling. Hold to it. Hodl, they say. Okay. Now, so this is the third is investing. The fourth is NFT. Non-fungible token is something which is the concept is slightly, it might confuse you. Non-fungible by the definition means it cannot be converted or it cannot be changed. So this particular blockchain, and yes, again, blockchain is the overall background of this entire discussion, because everything happened, what I am talking about is a case study of blockchain. So these are all the things which blockchain has done for us. So NFT is something that if a particular token or particular frame of artwork is done and it is bought by somebody, it cannot be resold, it cannot be duplicated. So this particular thing is used mostly for the celebrities, artists, singers, painters, as on today's date case study which we are seeing in the market, wherein non-fungible tokens are generated and it is being sold in these exchanges again. So there are some exchanges where you find all these non-fungible tokens. If you think that is of this value, you buy that, and this NFT will do a lot of things in metaverse, which is the next thing which is coming up. Now again, metaverse, again it is a jargon. So we will discuss about that in a later part of our video, maybe in the next video. So now this NFT is again kind of an investment what you can do, wherein you buy some non-fungible tokens and you become the owner of that, and when that particular thing is replicated, so you get royalties for that. So that is one part. And the last one is ETF. ETF is slightly on a bigger side. It is like mutual fund. So say for example, you want to buy or own bitcoins, or you want to have cryptocurrencies, but you don't want to own that. So in that you put in ETFs. It is nothing but the futures, market futures. So it is the derivative of all the market wherever it is happening. So let's suppose how do you know that BSE is going up or going down, or the stock market is going up and going down? You compare the top listed stocks and you get a derivative out of it, and you say, okay, fine, market is going up or going down. Similarly, ETF cannot, as on date, you cannot invest on ETF as a single individual investor in India. You need to have you have to buy it from outside market. Means you have to get listed in exchanges which do ETFs. Being a non-citizen of that country, it might be a little bit of difficult for you to put money and take out money. It's again a later part of the discussion. What we will do today is this NFT and ETF. We will keep that for the later part of the discussion. I am sure today the topics whatever we have covered, it was a friendly discussion between me and one of my friend. At this point, he wants to be anonymous, and thank you so much for it. I am sure that in today's topic, whatever I have covered, it might have given you a lot of insights about lot of things in cryptocurrency, in Bitcoin, and understanding few of the jargons. I am sure you will have definitely a lot of questions coming up to your mind. Please like, subscribe to my channel. If you want to see more of such kind of videos, I will be definitely helping you out. Please put comments also wherein you want to know a particular thing or you want me to cover a particular topic. I'll be more than happy to discuss and make a video on that in the next series. Thank you so much. Bye.